This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of some major emergency moves in China to reinvigorate their economy. But first, there was a good global dairy trade pulse auction earlier this morning, although the reverse of what the futures markets had signalled. There was no gain in skim milk powder prices holding its recent higher levels, but the important whole milk powder price rose 2.8% from the full auction a week ago and back to levels of a year ago. This is a good backdrop to this morning's Fonterra 2023-24 results announcement. The expansion of American retail sales at physical stores rose 4.1% last week from the same week a year ago. That is good, but is slowing from the gains since August. A year ago, they were rising 3.6%. But the widely watched Conference Board Consumer Sentiment Survey for September has brought a hesitation, slipping to the lower end of the narrow range it's been in for the past 2 years. Worries about job security seem to be a key factor here, although we probably shouldn't make too much of a range-bound shift. Election jitters have hit the Richmond Fed's factory survey covering the mid-Atlantic states, all battleground states, where uncertainty of the outcomes is pronounced. And there was a very well-supported US Treasury 2-year bond auction today, delivering a median yield of 3.47%. That's down from 3.83% at the equivalent event a month ago. In both, more than $100 billion in bids went unsatisfied. And ratings agency Moody's has warned that a downgrade for the US federal government is a live possibility unless it tackles its growing deficits. This comes a year after it placed the AAA rating on negative outlook. Clearly, it is watching with some unease. Across the Pacific, Japan's business activity continues to rise, based largely on a service sector that is now expanding at its fastest pace since April. Factory activity isn't expanding, however, according to this PMI survey. And Taiwanese export orders rose 9.1% in August from the same month a year ago to a 9-month high. In China, a leading Chinese economist and politician has called for Beijing to launch a 10 trillion yuan stimulus package, about 2.2 trillion New Zealand dollars, equivalent to 8% of Chinese GDP, to tide the economy over through the rest of 2024 as credit growth and domestic demand remain drained of energy. The economist calling for this is Liu Shijin, Deputy Director of the China Development Research Fund and Deputy Chair of the Economics Committee of the Chinese People's Political Consultative Congress. Responding to the plea for a jolt, the governor of the Central Bank of China said in a rare briefing yesterday that they'll cut their reserve ratio requirement by 50 basis points and likely match that again before the end of 2024. Together, these will add 2 trillion yuan of 2024 liquidity. He also said that the 7-day repo rate will be reduced by 20 basis points to 1.5%, and there'll be a 30 basis points drop in their medium-term lending facility. Mortgage rates will be dropped by 50 basis points, and the minimum deposit on a home purchase will be dropped to 15%. They did not specify exactly when these changes will go into effect, however. Although these measures have more than a whiff of panic surrounding them, clearly President Xi has given his officials a rocket to act quickly to turn around an economy stuck in a rut. And equity markets responded with their own rocket. And so did some components of commodities market, copper for example. We may see more commodity action today, but we should also keep in mind the program announced yesterday is very much less than what its own experts are calling for. And yesterday, the RBA's policy review kept its rates unchanged in the face of higher than target inflation levels. It's been 4 years there since they had a rate cut, but inflation remains above target and is proving persistent, so their room to move is limited. The US Treasury 10-year yield is now just on 3.73% and down 2 basis points from yesterday. And the price of gold will start today at $2,650 an ounce, and up $32 from yesterday to yet another all-time high. And oil prices have risen $1 to $71.50 a barrel in the US, while the international Brent price is now just on $75 a barrel. And the Kiwi dollar starts today at 63.3 US cents, and up a half a cent from this time yesterday, and its highest of the year and back to where it ended in 2023. Against the Aussie, we're up 40 basis points at 92 Australian cents. Against the euro, we're up 30 basis points at 56.7 euro cents. That all means our trade-weighted index starts today at 70.6 and up 40 basis points from yesterday and a 3-month high. And the Bitcoin price starts today at $63,216 and little change from this time yesterday. Volatility over the past 24 hours has been low at just under plus or minus 1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.